So in today's example, if you kind of look at what we were doing going into the New York Open, we were bouncing up a little bit, right? We were bouncing, bouncing, bouncing. And it's very easy to kind of get caught in that motion where, okay, well, maybe that's the low and we're just going to explode. Now, what I'm looking for is if the market's pulling back and the bias is short, I'm welcoming of the spike. I'm welcoming of the initial pop off the open, right? And that initial pop off the open where it kind of spikes up a little bit and then just rejects and falls down. I love that, because for me, I'm thinking, okay, if we take out that swing low, well, I'm looking at 21,566 as a potential target. And not only did that target get smashed, but it got obliterated, right? And the next area that I was looking at here was this 21,488, and that just goes back in time, right? It's just a previous level from Tuesday's high. So that's all I'm looking at, higher time frame previous day highs. In terms of macro levels that I'm looking at, if it's not a daily moving average like a 5 or a 10 or a 20 or a 50 or something like that, the only real higher time frame levels that I'm looking at, previous day high and low. That's it. That's all I really need, right? That's all I really need. So if I look at the 21,560s, that was yesterday's high. If I look at the 21,488s, that's Tuesday's high. So those two areas were potential areas where maybe we could, pull back to if the market got weak, which is what happened today. And, I took that quick short trade. So again, for all of you guys who are in the pursuit to 3K challenge, that's just, that's going to be a little challenge that where, we can hold each other accountable, right? You guys can post your charts in there. I'd like to get that room very, very active where, there's a lot more conversation going on other than, kind of just sitting on the sidelines and posting gains or just, waiting for me to post a chart. Because again, if you think about it from a trading perspective, a trading team perspective, you guys all want to be on the same page, right? And it's kind of good to see other people's perspectives, how they marking up their charts, what kind of risk management they're using as well. So again, when you really think about this morning, I think a lot of us kind of had that bias, right? Where maybe you had an idea if we lost the pre-market lows, you were going to go short. Maybe you had the idea to look for a 5-minute 20 SMA trade, right? That strategy. Maybe you had the idea for a 15-minute opening range short or a 30-minute opening range short. All of those trades worked out beautifully, right? Like all of the short trades worked out beautifully. So it doesn't really matter what spot, what strategy, what setup you were looking at. We were all kind of looking at the same things just based on people's levels. And I seen some people had some levels. I think Hannah had the 560 level, Viv had the 560 level. There was a couple other people that had levels down at, closer to those 400s and stuff like that. So those are all good things to kind of, mark up on your charts. And it's good to see other people doing that as well. Again, you don't get every day that has these flushes. The last week, I say, we've had some moves where it kind of spikes up, spikes down, and then it just goes into this weird consolidation period for like an hour, right? An hour and a half. And then boom, after lunch, there's some big explosion move, or yesterday it was power hour, so forth and so forth. I mean, literally a little upset yesterday. I leave the trade desk and, I'm going downstairs and I'm doing something. I forgot what I was doing, fixing myself something to drink or something like that. And I just, casually look at the phone and I'm like, that trend line that I drew all day and just kept extending and extending and extending, it finally broke. And when it broke, it just got obliterated, right? But it is what it is, right? I mean, to trade and sit here and try to look for something for six hours later on the day, you're mentally exhausted, right? Like, so that's okay. And the reason why it's okay is because typically when you have those consolidation days, or you have days where you kind of sit around your trade window and you don't really find anything, and then all of a sudden, let's say you walk away on the day with a paper cut, or you walk away on the day yesterday with a small loss, or you walk away with a small win, or you walk away with no trades at all yesterday. That's completely fine, because tomorrow always brings another opportunity, right? And look at today's opportunity. Was a beauty, absolute doozy for anyone who did catch that trade. And let's say you blew up your account yesterday and that was your last account, and let's say you're in a spot where you didn't plan on investing on any more evals for another week, right? I'm just using a fictitious story narrative here, but you would have missed out on this beautiful move yesterday because you tried to force something yesterday, right? Or you would have missed out on this move today because you were trying to force something yesterday. And when you look at those situations, that's life a lot of times, and that's trading. A lot of times, you know, when you're not really seeing anything clearly and you're scratching and crawling and you're trying to make this money, a lot of times when you're forcing a lot of that movement, you're probably going to get the setup that you were looking for to happen as quickly as you wanted it to happen the following day, the day after, even the next week, right? So there's always going to be that other opportunity. Even when the market presents itself as it looks like we missed out on making all this money, I can tell you, being here, you know, 12 years later, almost 13 years later, this is nothing new, right? This is nothing new. The market is going to continue to move. You're going to continue to get the great setups. You're going to continue to see price action be absolutely horrible some days. It's just like an ever ongoing cycle, right? Where it is what it is. So, you know, the reason we were kind of talking about yesterday, we got into that monologue and I was kind of talking about, you know, how the power of small gains compounding over days can get you paid out, right? And if you really focus on your leader account, right? So, you know, you're focusing on the one account, whether it's funded or evaluation doesn't really matter. And you're focusing on that one account. If realistically, you know, you put a target on yourself where you're kind of waiting for the best opportunity to take a trade or the best day to take a trade, or kind of avoiding the chop and avoiding that feeling of going on tilt and wanting to chase moves in between in the range, and you give yourself an idea to, you know, particularly take 1 to 3 trades a day, okay? And you give yourself this idea of, you know, if I make anything over $100, if I make anything over 150, 200 bucks, I'm okay with walking away, right? Being satisfied. That's the kind of go back on yesterday's monologue, right? The satisfaction, being satisfied, being content with what the market is giving you. If you start to just become very, very satisfied with the work that you're doing and the gains that you are receiving in return, you're going to see natural progression start to happen. And it's very easy to sit there and do the math and see that it really, really makes sense, right? 20 to 25 days, guys. Now, they don't have to be consecutive. And if they're not consecutive, obviously the timeline will be a little bit longer. Maybe it's 30 days, maybe it's 35. But you only need about 20 to 25 days to make about $1,000, okay? And that's payouts. That's money in your pocket. You probably only need between 17 and 21 days, which is about 3 trading weeks, to make about $500. And when you think about it on the grand scale of things, yeah, $500 is not life-changing money. Most of you guys want to make $2,000, $3,000, $4,000 a month. However, if we focus on that one individual leader account, like we were discussing yesterday, and we've got a bunch of follower accounts in our backpack, and let's say you do have those 5 accounts, and you are making $135 a day, don't look at it as you're not doing enough or you need to do more. Look at it in a sense where I've got 5 accounts in my backpack that are all making $100 a day, $150 a day over the course of 20, 25 days. You know, that's a nice nifty little payout, okay? And you know, if you're talking about taking out $1,000 per account, if you're talking about taking out $1,000 per account and you have 5 accounts, that's a $5,000 a month. So when you really think about it, do you really need to sit there and focus on trying to make, you know, $500 a day, $1,000 a day? No, you don't, right? You don't really need to do that. What you need to focus on is taking good trades and protecting the downside in terms of how much you're risking on a day in and day out basis. Now, there's different ways to do that. You can choose to risk $250 on one trade, but probably the smart thing to do is to stop trading if you do take a full max loss. The other way is you can kind of split it up. Maybe you want to risk $100, $120, $125 a trade. You'll probably be allowed to take 2 trades, right? If you want to risk, you know, $60, $70, $80 a trade, then you'll probably be allowed to take 3, 4 trades max, right? And that's something that you're going to have to work with. And that's something that you can do, but it doesn't take it does not take a lot of trades. It does not take a big dollar amount P&L wise to start making money, right? And to start making money consistently. And that's what I'd like to see for us here as a team, is to start making money consistently, where, we have our team taking multiple payouts from these prop firms on a month in and month out basis, right? That's what we ultimately want to see. And, that just creates a much better trading environment. It takes a lot of stress off of your shoulders as well. So again, it's not about really making the flashy gains. Use these prop firms to definitely, use these prop firms to definitely leverage the amount of money that you can make, right? It's not about the one account that needs to make $500 a day for 2 weeks so you can be eligible for a payout. It's about maybe making $100 to $200 for 2 to 3 weeks, for 3 to 4 weeks across 5, 10, 15 accounts to get you at $5, $10, $15,000 a month. And if you're doing those type of numbers, you're talking about a 6-figure a year, relatively easy, right? And again, I don't like using the word easy and trading in the same sentence or in the same paragraph, but relatively a lot less stressful and without wasting a lot of time. If you just kind of really focus on taking minimal trades and you focus on taking the best trades and you really focus on that risk management part. And like we were discussing yesterday, just being very, very content and satisfied with what the market is giving you. So again, holding yourself accountable each and every single day. I think that 3K challenge pursuit group is going to do very well as more people start to get involved. And again, guys, I've been running this Discord for 5 years. 5 years ago, it was a lot more options traders, and we've lost some people along the way, even who have traded futures. But even if I was just to look at the overall numbers now, some of these people, they don't have access to the entire room like you guys do as gold members. But if I take all in all over the course of 5 years, there's a total of, I just want to see, there's a total of like 400 people in this room. Now, I would probably say maybe 30-40% of those people have fallen through the cracks and they maybe no longer trade, or they don't trade in this room anymore, or this community. But in the future side of things, and when you talk about the gold members over the past 2 years for futures trading, there's probably about 130 of you guys that are in here. And if you look at the people that really wanted to join and opted into holding themselves accountable for the Pursuit to 3K challenge, it's about 20 of you guys, right? So when you start to think about that age-old comment where 90% of traders fail, the basic math, even in this community, is if there's 130 people in here and only 20 people really want to hold themselves accountable each and every single day and start working towards a mutual common goal, that's about 10%, 12% of you guys, right? So become the 10 to 12% of traders who do find success and actually make it, and don't fall into the 90% of traders that never make it, right? If you as a trader to be consistent need to do what the 90% are not doing, this is a hell of a start, right? A hell of a start by at least acknowledging that you need to get in with a group and a team to trade. You need to hold yourself accountable. Maybe you need some of these goals, and maybe you need to hit just a mini milestone, right? A mini milestone. Even taking out $500 across 2 or 3 accounts over the next 30 to 45 days is a mini milestone that's going to get you down that path where, okay, now this starts to make sense, right? Now I see how I can get to, become more consistent in doing this full time, maybe, right? Or at least taking, monthly income out of the markets, right? So, I definitely applaud you guys who definitely want to hold yourselves accountable. And again, make sure that you guys are staying on top of it, right? If you run into a bad day, it doesn't necessarily mean that it's the end of the road for you. It's the end of the challenge for you. You're going to have bad days. You're going to have losing days. And I'll be honest with you guys, over the course of, 25, 35 days, over the course of the next month, you guys will probably run into 5 or 6 losing days. And it's going to be how well you manage those 5 or 6 losing days that's going to result in whether you come out on the other side profitable, or you come out on the other side in the same spot that you were at, continuing to churn and burn accounts. Okay. So again, definitely hold yourself accountable. It's not always about the big flashy gains. I tell people this: you want to make $1,000 a day net profit, then have at least 10 funded accounts that are all making $100. It's much easier to make $100 across 10 accounts and just do that for maybe a week or two longer than it is to take one or two accounts and try to make $10,000 this month. Okay. It's just, now you're talking about making $500 to $1,000 a day, which is going to require either trading a lot larger size or taking a lot more trades than it would be to just take one or two, three trades and make $100 to $200, but across 10 or 15 accounts, right? So again, that's the power of the prop firms. As cheap as they are, you can definitely, maximize your leverage here. But that's just that. So again, we'll definitely get it more in depth. The pre-market game plans that people were posting today with the charts was really, really good. I'd like to see more people take the time out of their day to post those, because it's going to be definitely beneficial for you, having that action plan and having those, set rules and set setups and set levels that you're looking for. That way you're ready for when the market does want to confirm those levels or confirm those setups. You had a game plan of what you were actually looking for, and then you executed that game plan, right? So what I'm kind of looking at here on the 5-minute time frame, we came up to those Tuesday highs right here at 21,488. We kind of briefly reclaimed that. Our higher time frame bias is still trading below the VWAP here. It's also still trading. I was in a short position. I just got out. I was in this 20 SMA short here. Did sit through drawdown on the previous 5-minute candle. No stress there. Biases are all still pretty short there, and then I just got out on that flush there. But I got a 10-day moving average support here on a daily at 21,343. That's about 40 points down. We're pushing low of day now. I could see this area or very close to this zone getting tagged here. That would also kind of match us up with yesterday's low as well. So we are getting a nice little flush here. If anyone is short, I would have taken profits through the run of low of day because we're about 20 points down from the run of low of day. So, when we go back to what we were discussing yesterday and what this whole pursuit to $3,000 challenge is don't get yourself greedy where you're thinking, okay, cool, this market's going to go down 500 more points today. It's going to flush through this moving average and go to 300s. Maybe it can. 100,000% it can. But what's the problem in taking the 20 points through the run of low of day? What's the problem with that, right? Again, even on 2 micros, 20 points, you're looking at 40 points a micro. That's $100 trade, right? $80 trade, $120 trade. Great move here, great rejection, and actually beautiful 5-minute 20 SMA play in line with the higher time frame that I use, the 15-minute to scalp, in line with that short bias, right? Here is your 79-point range rejection candle that closes back underneath this 20 SMA. It takes 1, 2 candles, 3 candles to confirm, so 15 minutes to confirm. It back tests once more this 20 SMA. So now you have this little wick right here. You could have used this as a whole stop loss. If we close back over the 20 SMA, right? If we close back over the 20 SMA, you could definitely just get out of the trade and cut the loss. As long as we stay below the 20 SMA and we do not close over that, you can just hold that short. And wait for your payday. That's it. You're in line with what the direction of what the higher time frame is doing and trying to do. So that's a beautiful trade setup there. It was also a break over Tuesday's highs with the pullback and then a lower high. I drew this, trend line here to kind of show me that as long as we kind of stay below this, pressure is probably going to be pushing to the downside, which gave me more confidence to take this short here. And to be honest, I'm done here trading. In terms of probably looking for a lot of trades. I might look for one more on another account, but a lot of these accounts are getting locked up here. And to be honest, a lot of, and we just came down here and we tagged the daily 5 SMA, guys. It depends on who you ask, AJ, about summer trading. If you ask a big time trader who's got millions of dollars in the market, hundreds of thousands of dollars that they're playing with in the market, typically summertime for them is a little bit of a vacation time. Kids are out of school. The sun is finally shining on the East Coast. A lot of these guys get up to Nantucket, go down to Florida and stuff. There's not a whole lot of volume. For us small guys, we tend to sit through summertime as if nothing ever happened. You might notice some difference here or there, but with Trump in office, I don't expect us to really have any dead periods of time. The market will be moving regardless. Still enough for you to make money. Good little stand here off of, so this is basically a sweep of yesterday's lows with a good stand off of our daily 5 SMA. This is kind of setting up a little bit of an inversion here. This range is a little big. It's 50 points. I want to kind of see exactly what the next 5-minute candle does here. If the next 5-minute candle kind of pulls back and puts in a little bit of a higher low, we might have an opportunity to long this here by using a stop loss under 340 or even the 304. It would require you to use a bigger stop loss just because the range here on this candle is about 50 points and our current ATR is 44 points. So if you want to rock out a trade idea like this with a very tight tiny stop, this is not going to be the setup for you, and probably just hang tight, right? But first flush here with an immediate stand is a good sign for the Bulls. We got some people locking up here. Charlie's done for the day. Looks like he's got multiple accounts there locked up at around $100. Hannah was done early in the day. B Twins was done early in the day. One of my accounts was done early in the day. KK Buckeye was done earlier. It's pretty good here. I think Nisha was done as well. Elder was done as well. Something like this trade here, what you would want to see is we flushed yesterday's low, we held the daily 5, we've reclaimed both not only the daily 5 and the daily 10. You'd want to see these following next 2 to 3 candles kind of hold 21,340s. You definitely want to see them hold this initial candle here, 325, and you want to see this kind of push up. So if you were doing something like an inversion on this, you would probably want to see this range hold for your long position on this quick scalp back up to the upside. I mean, if we really start to lose 325s, I really wouldn't want to be holding it and give it another 25 points of downside here. So I would want to cut this 50-point range in half at 25 points here and see if you can catch a little bit of a scalp. I'm attempting this here on a fresh account. This account has no trades on the day, so we're going to see how it wants to work out. Worst case scenario here, I'm going to lose 50 bucks, right? So I'm not really stressing that much. I'm just playing out this idea here and trying to use this just see if we get a little bit of a run up here. I do expect it to pull back. I do expect it to pull back into this 340, maybe even 330 range, but I would like to see that hold. That would give me a little bit more verification of like confirmation, a little bit more confidence. I do have a 15-point take profit on here, so we're really not even looking for that much. In terms of the upside, my position is 359 is my average. You know, and we're getting awfully close to me getting tagged here for take profit. Now, if I was looking to play this with a lot heavier size on a quick scalp, for sure getting in here over 21,364 into 371 is a 5-point take profit. So there's been instances where, let's say I'm trading evaluations and I'm just looking for 5-6 points. I would have gotten into this with, 1 to 2 mini contracts, taking $100 to $200 on that trade and just walking away from it. And yeah, maybe it continues to go up later. But when I'm just looking to play aggressive size and take bigger profits, obviously you want to just get in and get out as fast as you can. That's another thing too with sizing. You want to kind of know when you get into these trades, depending on what your size is going to really depend on how much comfort you're really willing to let it dance, right? Again, you're trading one mini contract or higher. You're not really looking to let these things dance 20, 30, 40 points against you, right? So unless you have a really, really big account size with some decent drawdown where maybe $1,000 drawdown is going to be, something that you would be interested in here. Again, I'm kind of approaching 10 points in the profit here again. I have no problem scraping off 10 points. Anything over 10 points, if it really starts to reject again here, if it gives me one opportunity, that's only the problem sometimes of me talking and doing these is I tend to not look at the trade that much. I'm looking at the chart. So I could have tagged 10 points at least once or twice here. There, I'm up 10 points again. I could definitely take around 10 points here. I'd just like to see it if it wants to pop over these 70s. If it does pop over the 70s, I'm pretty sure that the 15-point take profit will get filled. But there it goes. And that's the fill there, guys. 15 points on that. So again, the trade idea, we took two trades here since I kind of came onto this live stream. The first one was the lower high rejection here at Tuesday's highs, 488. That was a 5-minute 20 SMA play. We consolidated for about 15-20 minutes, then confirmed. I did get stuck in a little bit of drawdown here, right, where it kind of bounced against me into the 20 SMA, which is completely fine. My stop loss was any closure above that 20 SMA. The bias was still long. I mean, it was still short on my 15-minute time frame. And then we got the big flush, and obviously, I didn't capture any one of this 115 points, but I did capture some decent profits on that. And then I flipped into another account here once we swept the daily 10 SMA and the daily 5. Looked at this, kind of reversal off of that to gauge where can I put risk on the table and where can I catch a little bit of a scalp, right? So obviously pushing a lot higher. And when you get back into what we were talking about yesterday about being satisfied, I've got to be satisfied with the 15 points. That was my plan going into this trade from the beginning, regardless of the dollar amount on the screen that I made. It's completely irrelevant, right? It's really completely irrelevant. You have to execute your plan. A lot of times us as traders will look back at a move or look at the move that we were in, and either we cut it too early or we took a loss when we didn't need to because we started to panic a little bit, or we took some gains and then we watch it go up and we would have made 2 to 3 times more. Is irrelevant, right? That was not in the plan. If it was that easy to say that I know that it's going to this specific level, I need X amount of points, I know I'm going to make $1 million on this trade, then we would do it every single time, right? I just know that for me, and everyone's trading style is different, anytime I'm really trying to seek and hunt out more gains, it never really ends well for me. And not necessarily like that I go from completely green to deep drawdown, but it just, I tend to give back a lot of profits that I didn't need to, and it forces a lot of emotions that I don't want to feel. A lot of anxiety, a lot of agitation, a lot of like FOMO, a lot of like revenge style stuff here. And that could also trigger me to, firing up another account, right? Where I go and I open up another account that maybe I didn't trade today, and then I say, okay, this move I was already in it, so let me just get back into the move because I should have still been in it, but I'm like 30-40 points away from the correct entry. So when it does pull back 20 points, even if it's still going higher, I'm just getting drugged through the mud on that, all because I have the feeling of I'm missing more of the move I was already in, right? So I've eliminated that from a lot of my trading game, and I just accept what I got on the trade. Like, would I have loved to capture 30-40 points off this move? Absolutely. But that was never my plan going in, right? Did anyone take the reversal here? This is what we used to call back in the day when it was a lot more future or options traders and stock traders. We used to call this the old Biggs bottom. Buddy of mine who trades in here, he would love these type of plays that, big washouts followed by a stand at a big level of demand. And he would kind of pick this off. So I would, kind of joke with him and say, Biggs is always calling the bottom, and we just kind of coined it the old Biggs bottom. But that's also a strategy that you guys can build into your arsenal as well. You don't get them every day, right? It's not every hammer candle, it's not every doji candle that's on the chart where you want to jump, quote unquote, these type of setups. It's typically like after a super extended move that has drawn into some type of liquidity from a previous day lower high or a big old moving average on the chart that was way down, right? So, those are key levels where you want to look for these type of setups. It's not necessarily like, let me find an example. It's not necessarily like I could say that this was a doji candle here, right? Like this little candle here, big drop, 1-2 consolidation. Someone could say, okay, I can get in long here. It's not like that. You're in the middle of a range. It's got to like really wash out some bigger demand level, some bigger supply level. It's actually also good setup on the 15-minute as well. That just confirmed. If you kind of look at the 15-minute chart, 15-minute chart, kind of flushed out those demand zones and then put in this big old green hammer candle, and now it's kind of confirmed. If you even took that over 412, which was right here, right here, if you took that over 412, you still could have captured some cash, another 10-point scalp, right? Just keep in mind that the bounces are extravagant because we're so far extended from your higher time frame supply, right? Like we are so extended from VWAP to the downside. We're so extended from the 20 SMA to the downside on your 15-minute chart that the bounces are going to provide even some great opportunity to catch good trades, right? They're going to provide that opportunity to catch a good trade. Versus when you're kind of trading a little bit tighter to your supply or demand, the bounces, they're short-lived, they're much more choppy, so like when we're, when you get into those days where it's like we start to say that the market is barcoding and the market is chopping around, look at your higher time frame, look at the moving averages, look at your VWAP, look how close you're probably trading to those levels, and that's probably why you're chopping. You got to get really extended away from those levels to have that good like that good range, right? I mean, right now the 5-minute ATR is 42 points. I mean, yesterday it was trading even at this time between 15 and 18 points, which we are probably 2.5 the amount of range. Now some people like this, some people hate it. Some people, who have really tight stop losses or their entry prices where they're looking to take trades are kind of loosey goosey, where they need the trade to wiggle around a little bit first, are probably not going to enjoy this as much if they're on the wrong side and it's kind of trickling around them a little for a little bit, because you're not going to be able to withstand that amount of drawdown. But if you have a decent entry, the great thing about a higher ATR is that your smaller profits are going to get hit a lot faster. And when we go up in volatility, when the range goes up, I don't adjust my targets. I'm not saying, okay, because of the 5-minute ATR is 40 points right now, I need 25, 30 points. I'm not really saying that. I'm not saying I need, 50 points. I'm still looking for the same 15, 20 points, the same 10, 20 points, right? I keep everything the same regardless of volatility, and I've adjusted those targets to where even in the worst conditions where the market is chopping around and volatility is very, very low, I can still hit those price targets of 10 to 20 points, right? And when the market increases its range, those targets are going to get hit a lot faster because of the range is expanded, which for me, I like, because what it does is it creates a much shorter workday. Like, I've traded 3 accounts today, and by any means, I am not really up a ton, considering the price action. One account is up 233. Another account is up 199, right? And these are funded accounts. So that's 300, 300, 400, 420, and then another account is up $94. So I only got around to trading 3 accounts today. One of these accounts was definitely for the Pursuit to 3K challenge, and I actually just added one of the trades that I took here was on that account. I didn't want to put any more trades on that account, but let me see the trade count if it ever wants to load. Trying to load the stats, but it should be pretty close to under 3 trades, I think. And trading no more than 5 micros. I think 4 micros was the most that I traded today. I think I hit one trade with 2 micros, another trade with 4 micros. I'd be very cautious chasing the long right here, right now, as we approach 444. That is the declining 5-minute supply. The pressure and the bias is still short. You can see going back to about 8 o'clock, which is about an hour and a half ago, we are putting in lower highs. Okay, we're still putting in lower highs. We have yet to really close over a previous swing high. At least since I've been on this live stream 41 minutes ago, we have been working our way down. But it can be days like today as well where your trades are working out. And this is what I want to focus on, especially in the 3K Pursuit Challenge channel. On days today where your setups are working and you're making cash, right? Or you're watching trades where, hey, I would have taken this trade, I would have made money on it. It's giving you that feeling of I should get back into the markets, when realistically you should just stop trading and stop trying to push the balance, because what you're actually doing by doing that is on the days where the market is choppy and your scenarios and situations are not working as good, you're going to be in that same mindset where I need to keep taking trades. Oh, here's another setup. I need to keep taking trades. And those are the days where you blow out. Those are the days where you burn out. Those are the days where you experience those big losses. Remember, all I'm trying to do for this challenge is, again, you're going to, some days like KK Buckeye had a trade for $400 or whatever on the trades that they took. That's great. The challenge is if you make $100 to $200, you want to stop trading, because that's all you really need to get paid out at the end of the month. And as long as we've got accounts in our backpack, which all of you guys will have additional accounts to link up to your leader account, you're going to make more money than your $1,000 withdrawal, than your $500 withdrawal, right? Over time. But we've got to do it in baby steps. We've got to get the first 500, the first 1,000, and then we work on 2,000, and then 2,500, and then 3,000 as we start to leverage more accounts. But you will have days, right? You will have days where you get in a trade, and let's say your risk was defined, you were giving up less than $250 on that trade, and you trailed it, and you trailed it, and you scaled out, and you held a runner, and you turn a singular trade into $200, $300, $400, right? So you will have those outlier days. Those outlier days off those outlier trades need to be protected at all cost. It's not a mindset of I made 400 today, I'm going to go ahead and, try to take another trade because I'm seeing price action so well, and then you give it back, right? So protect those days. As long as you can make within inside of 3-4 trades, I would say would be the max that you really want to take. But you definitely want to work on, trying to make $100 to $200 in under 3 trades, which I think is very obtainable. And then if you do catch that one trade where you make $200, $300 on that one trade, it makes it the day an amazing day, like an amazing day, right? Because you were not expecting that, for one. And 2, it helps the overall math on the other side, because now if you're only planning on risking 250, essentially KK Buckeye can lose 2 days in a row and be flat, right? He can lose 250 tomorrow, 250 the next day, and still be flat, right? So there's really no harm in his equity curve over the course of 30 to 45 days. You see? So when those outlier day comes, you want to really protect it, because if you're operating this from a mathematical standpoint, you know that in order to get an account passed through evaluation stage, or get to a payout, you've got to make 3K. That's why I just put the blanket number on there, pursuit to 3K challenge, right? We're just trying to make 3K. If you make 3K on a funded account, you're probably taking out anywhere between $500 to $1,000 of that account. If you make 3,000 on an eval, guess what? Congratulations, you're graduating, you're getting yourself a funded account. So as long as we can make around 3,000, we just really need to let that math do what it needs to do, right? Like we can't control the math. We just need to let the math work itself out. And when you have those bigger days, right? You have those $250 days, those $300 days, those $400 days that will come naturally. It's one, speeding up the timeline naturally, and two, it's helping out the days where you do lose 250. Because if that happens, let's say 3 days out of the month, you make $400 because the price action was really smooth. Realistically, you can afford to take one more losing day that month. You can afford to take another losing day that week, right? And it's not going to hurt the equity curve. We've got to protect the equity curve. The equity curve needs to chop up and down sideways like a barcode and then see gradual spikes. It doesn't need to see a big spike up followed by a big spike all the way to flat, a big spike down. That's erratic trading. We've got to keep it orderly and as smooth as possible. And the best way that you can keep it as smooth as possible is to keep your max daily loss day around the same size as your average winning day. That's it. I don't care what strategy you trade. I don't care how many points you're looking for. I don't care what your stop loss is, whether you want to risk, 50, 60 points on one trade. I don't really care what you want to do. I don't care if you want to risk 15 points a trade. It doesn't really matter on how the little math works out, as long as the macro math makes sense. If you're averaging between $100 and $200 a day, with the outlier day of 200 plus mixed in naturally and organically, and you keep your losses at $250 a day, it's impossible for you to blow an account in a month, in 10 days. It's impossible. It's actually impossible to do that unless you just lose $250 for 10 days straight. And I don't know about you guys, but I mean, if you're trading the size and under the parameters that we've kind of set forth this challenge, this goal, I mean, it's almost impossible, right? So that way, when you guys are working on this, you're going to start to see where your cracks are, right? Where's the wrinkle at in your game? Because it's probably not the strategy. It's probably not the price action. It's probably not the market. It's not going to be Donald Trump. It's not going to be tariffs. It's not going to be FOMC. It's not going to be CPI. It's not going to be all these other excuses that we make up for ourselves. It's probably going to be, I went on tilt. I traded too much. I went from 3 trades expected of me to 10 trades today. I went from trading 4 micros today to feeling really good about myself to trading 1 mini today. That's what's going to derail everything. Okay? And if you have a problem with, let's say, the first trade of the day you lose, and you have that itch and desire to keep continuing trading, you can just trade another account. And again, Apex is the king of kicking this ball and continuing to move the field goal on all of their discounts. They're offering 90% off until whatever it was, right? The next few days or something like that. Like if you want it, like if you tell yourself this, I'm comfortable taking 3 to 5 trades a day, then have 3 to 5 accounts. Okay. Like it's very, very simple. It's very, very simple. If you don't want to start putting accounts in your backpack to start copy trading yet because you're not comfortable and confident in it, and you would rather take each account and use it as its own trade, do so. Because if you have 5 accounts, that's going to allow you 5 trades a day. And geez, guys, if we lose 5 trades in a day, I mean, that's $1,000 across 5 accounts that you're just completely on tilt and something's going on. You're not seeing the market right? At least some of those accounts should be green. 1 of them, 2 of them, 3 of them should be green, right? So you play it that way, right? There's a lot of different ways to skin this cat, and you have to figure out the best way that works for you. And as you get more comfortable with just walking away when you take a trade or two and a couple good trades, then you can start really grouping your accounts together. Start throwing them in your backpack. You get a few payouts and increase that $1,000 a month to $3,000 a month paycheck by simply adding 2 more accounts, right? It sounds simple, right? Because it is simple if you allow yourself to stay on course and work the plan. It's when you guys get all squirrely, and again, I do the same thing as well, but you know, you just got to realize it in real time that, this stuff still does take time. It's not like we can just get to the finish line today. As much as I would love to say we can all just go get paid at the end of the week, I don't think it's going to be possible unless you've already got a funded account that's damn near ready to get paid out. So for me, how can I get there as quickly as possible? And for me, it turns into a thing of, I just want to get through as many damn days as I can. Like, I want to get through as many days as I can, because I know every day that I get through is one day closer to this goal that I'm racing towards anyways. Right? So we're getting slammed here right at our 5-minute 20 SMA. This has been a good bounce so far. I mean, if you really think about it, from the reclaim here is up over 100 points. From the absolute dead low is up about 135 points. This is a hell of a bounce here. This bounce move is over. If you didn't catch it, don't try to catch it now. Now it needs to do something else. So whether it needs to pull all the way back into this zone, this green box, and it needs to hold, great. Or it needs to take out 488, pull back to where we're currently trading, and then confirm 488. But don't chase the long now. You had a lot of opportunity to execute on it. And again, if you didn't, you don't have to feel bad about it. You don't have to be like, well, how come I didn't see this? It's because you weren't looking for it, right? The brain is only going to see what it's trained and what it has seen in the past. And if you haven't taken these type of trades, you can't expect your brain to understand, I should be in this trade, other people can see this trade. That has nothing to do with it. Like, if you need to screenshot, and I'll do it right now because I'm going to make notations on this. Actually, I'll do it right now. If you need to see these type of setups, then screen capture them, right? Make notations on them. Why should your brain identify that this was a reversal? Well, there's a couple things that went on here. Where could my entry be? Well, it could be here. Where could my stop loss be? Well, it could be here. What could be my target? Well, I could target this consolidation low, which also seems to match up very nicely with this 20 SMA, right? So there's a lot of things going on here that you can start to identify. And as time starts to move on and you take these trades and you identify them, today, tomorrow, the next week, it just starts to become a natural thing. And again, that's the problem a lot of people have, is a lot of traders want to force seeing what everyone else sees. You can't do that if you're not looking for it. Your brain's not designed to do that. So yeah, so my road to my pursuit to 3K challenge made 243 with 2 trades. I really didn't want to take that. I really didn't want to take the second one on it, but hey, why not? Average trade time was only 53 seconds. I did trade between 4 and 5 micro contracts on this one, it looks like. I think I threw 5 on there on another account that I didn't want to use it on. That's why. But anyways. So 9 total contracts traded today. 2 winning trades. Obviously, we know my daily loss limit was going to be 250 on this. So whether I was willing to give it up in 1 or 2 trades, You know, I would have lived and died by that. I was willing to stop out anything over $100, which first trade was about $130. And the second trade was about the same, probably $100 or so. And then the other account, which I guess, I mean, I'm probably going to start backpacking all of these accounts at this point in time. The other account, I did take more trades. I didn't necessarily make any more money. I just took a lot more smaller price target scalps. This had 5 trades total. I did take one loser for $10. I kind of screwed myself out of that because I got into the trade, and for whatever reason, maybe it'll happen to you guys later. My finger stays hovering. Guys, we're pushing into 488. My finger stays hovering over the mouse. And for whatever reason, I don't know if I'm getting old, I don't know if I have arthritis or what the hell's going on, but my finger just clicked out of nowhere. I wasn't trying to click because I don't really run hard stop losses. I just run hard take profits. So I'm always hovering over the, like if I'm long, I'm hovering over the sell button. And for whatever the hell reason, my finger just jolted because I did not want to take that loss. But anyways, it was a 4 contract, 4 micro loss for $10. I don't know what the hell happened there. And then we took 4 winners. The largest winning trade was $78 and the average winning trade was $46. And we made $222 on that. So that's not bad. That's not bad. So can you make a case, right? Like I just want to bring things to people's attentions to start noticing things on the chart. Could you make a case, because the higher time frame bias is still short-sighted, that this period of consolidation that we had here off the last 20 SMA trade, if I was to drag this, could we make a case that this is a supply zone and now we have created a channel? Right, so I would assume that until we break out of this channel, pull back into it, hold, would be safe to say that we're actually going to move higher. But you could also make a case that if you get this doji or inverse hammer and it starts to confirm, that you could definitely use the top of this channel as a max pain to short maybe into the middle of this range, right? These are things that I start looking at. These are things that I start looking at and see, because now we have just created a clear supply and demand zone, right? Price action was holding previous support, lost it, and now it's back testing previous support, which is going to turn into new resistance. So supply, demand,